Hello, welcome everyone to another episode of Irreplaceable Choice, where we speak to individuals who have kept pace with the changes in this world, especially the tech world. Technology is one of those types of industries and spaces, especially around fintech and financial services, has changed so much over the last few years. Today, we're speaking to a guest that's done just that, has kept up with the progressive changes or let's say fundamental changes in the way people move money, invest, as well as do banking and even things like security and other issues that such as compliance and those sort of things. But we're speaking today to Simon Barnby, who's a CMO in this evolving tech space, and you can imagine the customer base is changing, the target audience adjusting to rapid change in the market space. So today I want to introduce Simon. Welcome, Simon.
Hi, nice to be here. Thank you.
Yeah. So today we're going to start digging into some of the key areas. I'd love to hear your journey, especially across the transitions we've seen in tech over the last few years. You're CMO of Archax, which I find is a fascinating business because it's got all the elements of blockchain and so on, but it's also got those Bitcoin and those hypey type of things that not everybody understands. And maybe some people get into it and they absolutely love it. Other people have a bit of, it's got a bit of polarizing effect on some people. So give us your view from a CMO's perspective. I mean, give us your journey of how you got into this and why this space as opposed to anything else you could do.
Sure. Well, yeah, thank you again for inviting me along today. Great to be here. I guess personally, my journey began, well, I'll go way back to my university where I actually did a technology degree. I did an electronic and electrical engineering degree. So I guess my original grounding was in technology, but I pretty soon realized that I didn't want to be a technology person myself in terms of my career, and I wanted to be more on the commercial side. So I made a sort of a conscious effort to move out of the tech space and into the commercial space, really via getting involved in product development and product management, and then into sales and business development and marketing. So pretty sort of encompassing sort of all areas of the commercial side of the business, having started on the technology side. And in terms of the places that I worked, I mean, again, when I sort of moved away from technology and into commercial, I ended up in the financial markets arena more by chance than a particular plan to be in that space. But that's kind of where I ended up and spent most of my time working for technology companies. So like fintech companies providing technology and data and trading solutions to financial markets participants around the world. Spent many years at a company called Fidessa, which is a big global trading platform provider. And having spent 14 odd years there, decided I wanted to do something a bit different. And so was consulting with fintech firms in London, helping them with business development and strategy and marketing and fundraising. And through some of those projects got exposed to blockchain-based products and cryptocurrencies and had an interest in that and realized that actually blockchain, DLT technology, tokenization had the potential to revolutionize and disrupt traditional financial markets too. And met the founders of Archax back in May 2018, three hedge fund guys who were just setting the business up. So I was the first to join them and started this journey into sort of crypto, digital assets, tokenization, tokenized real world assets, and the like. And that's where I am today.
Yeah, it's fascinating. I see you even in your career acted as a CMO as a service. I quite like that as a as a term.
Yeah, that's kind of when I was sort of consulting with fintech firms in London. It was just that, CMO as a service. So.
That's lovely. I love that because it's obviously you got service as a service these days, which is I'm not sure if that's actually a thing, but I see people are doing that as well. But yeah. CMO as a service is very interesting because it's completely different to a fractional type of perception I get when I see CMO as a service. But I just thought that was fascinating. And that's with Media Bond. I mean, you're doing a lot of that type of thing in for consulting with firms and that, strategic advisor, also founder of a business and so on. So, I mean, you've been through quite a few startups. You've been through quite a few, let's call it those aches and pains of beginning sort of a business journey. And one of the things I pulled from your profile, which I thought was very interesting, not many people that are in the tech space and in the marketing space have got true understanding of the P&L and what it actually costs, what things actually cost. And I'm guessing your knowledge and understanding of marketing budgets and hitting those KPIs, and when there's a marketing investment that goes in, sort of what comes back. How do you actually quantify? Because sometimes it can be what some people consider a dark art, to invest money in marketing and then something's just supposed to magically happen called sales or lead generation and so on. So tell me a bit about that. How do you cross-pollinate lots of areas of business in the startup world as your journey progressed?
Yeah, I mean, I've kind of, as you say, I have worked for a number of sort of startups, various stages of startups, but also worked for big global corporates as well. So kind of experienced both sides, from the small entity side to the big corporate side. And also, I guess, I'm not a marketeer by trade. I haven't studied marketing. I didn't sort of do a marketing degree or qualification or anything. I guess as I started out from a technical side, as I said earlier, I moved into the commercial side. One of the areas of the commercial activities I got involved with was marketing, and I enjoyed it, and I found it quite interesting and exciting. And I think in the financial technology space, having a technology background helps, because it means you have the ability to understand technology. Having experience in different areas of business helps as well. And I think you kind of bring all those things together and you then sort of leverage all that experience in terms of marketing. And you're right. I think doing marketing with a grounding in reality and understanding the costs of things and how things actually work from a business perspective probably helps.
So, yes, I mean, it absolutely does. And out of all the discussions I've had with various people, I mean, we've done way over close to 150 interviews or podcasts with different experts across different industries. What's really interesting for me, there seems to be a pattern where we have individuals that have studied in the engineering field. So, I mean, I studied as a mechanical engineer. I've spoken to chemical and electronic engineers, etc. They always end up somewhere else. I'm not sure how that works, either in finance or product development, or they end up in marketing. And it's fascinating to see how what should literally be a logical type of mind, if you like, initial. I think when you start, you don't really know what you want to become. In all fairness, and I think when you get to go to university and that, and you do it because you get told to, or this is just the expected thing. And then as your career progresses, you then drift towards where there's a natural fit. Would you agree with that as a statement?
Yeah, I think that's definitely true. I mean, when I go back to studying at university, I don't really remember making a conscious decision to go and study electrical and electronic engineering. I don't really remember how that happened, but obviously somehow it did, and I ended up there, and I did enjoy it, but I also knew it wasn't for me for a career. But I think it was a good place to start. I think any kind of degree like that, there's a certain discipline to how you study and how you learn, and that is all useful skills that can transfer into sort of other areas of business quite successfully. So I think it's a pretty good grounding. And when I wanted to move in a more commercial direction, again, I didn't really know where I wanted to end up. Was it sort of product related? Was it sales? Was it management? Was it marketing? And I guess marketing is kind of where I have ended up. Although I must also say that my title is CMO and marketing is a focus, but I do a lot more besides that. And I think particularly in startups, you kind of need all-rounders, people who can wear a number of different hats and do a number of different things. And certainly my journey at Archax has been one of fundraising. We're a startup, so I've been working on fundraising for the business. You're always selling wherever you go, whether you're selling the business to raise money or selling the vision to raise money and to win clients. So I think it always involves a bit of sales, and it involves management. You're sort of building up teams of people and building out a business. There's kind of management skills are important too. So I think being a bit of an all-rounder really helps.
Yeah, all rounders pretty much there, but you can't just be okay being an all-rounder, you actually have to be pretty sharp at most of those things. I mean, raising capital these days has become quite a discipline and quite an art to a large extent. I mean, you can't just slap together sort of a 5-page pitch deck and just hope for the best. People aren't handing money out like they used to, you know, when there was a lot of money around. I think things have changed in the investment space, especially venture capital for startups, etc. But you've been through that, and what's really interesting as a CMO, you're going to be asked the question, sort of, okay, this looks like a good idea. How are we going to get a return on investment? And from a marketing point of view, your focus would be product market fit, competitor analysis, things like how long will it take before we see a return? I mean, it's one thing to do a spreadsheet. It's another thing to actually make it happen. So those forecasts are pretty tough. So I'm just going to go through some of those thinking that you go when you have to go and do a fundraise. And as, I mean, with your technical background, what's the process that you think is the right sort of way? And what have you done in the past that's really worked for you in capital raising as a startup CMO?
Yeah, I mean, it's interesting. As I said, you know, Archax was formed in 2018, but we only really started going live with products and services and generating revenue last year. So it's been quite a long journey. And obviously, if you're not generating revenue, then you have to raise funds to keep the business going. So right from the very start into the middle of 2018, we've been out talking to investors and raising money. And pretty much every time we closed a round, we'd then open a new one. So it's been a constant fundraising journey. And it's hugely time consuming. You know, myself and the CEO have spent, you know, a large portion of our time on raising money for the business, which is very important. But obviously, when you're building a business, there's the day job to do as well. So that's always quite a challenge. But fundraising, like you said, is difficult. And, you know, when you're really a complete startup and you're sort of pre-seed or seed fundraising, you have to convince people of the vision of what you're going to build because you don't have anything yet. So that's one kind of sales skill. And then along the journey, slowly you start to, you know, firm up a vision and build a credible business plan and a go-to-market strategy, and obviously a financial model with forecasts and everything. And then in our case, we were building technology. So you achieve certain technology milestones so you can actually show things, demonstrate things. We had to be regulated. Our vision was to be a regulated firm in this digital asset space. So regulation takes time. That was another good 2 years worth of time and effort to get regulated. But once you're regulated, obviously you're a different proposition again. So as the journey continues, you know, your business gets more and more credible and more established. And so the money you're raising theoretically gets easier. I don't think it does get easier, but you can raise more money maybe from a broader set of people. Because there are investors out there who like these very early stage companies because they can get a large percentage or a larger percentage generally for an investment early on. And then as the business grows and matures, you know, different investors' appetite is attracted in, and you get different types of investors along the way. I mean, in the early days, you know, friends and family and sort of random people we met invested, and then in the more recent rounds, we've had sort of more VC firms, family offices, and the like. And, you know, indeed in Archax, in our Series A round that we did in 2022, you know, Aberdeen Asset Management came in and they're now our largest external shareholder. So, you know, having begun with sort of scraping money together from friends and family, you know, we had a Series A which was led by Aberdeen Asset Management. So it's, you know, a huge difference in terms of the kind of fundraise that's taken place at each stage of the Archax journey.
What stood out for me, and what I think it's quite important for the audience to understand and maybe get real understanding, because sometimes when you put a profile on LinkedIn or you put do a CV or as the Americans say, a resume, and you try to talk and you say, look, this is who I am, this is what I do, and then obviously this is what the company does. It's very easy to say, and I'm going to read what it says here. I mean, creative, imaginative, hardworking with drive and enthusiasm. Now, it's easy enough to put that into a sentence, but to actually go through living that on a day-to-day basis. And if you start I think you start 2018, and then your real funding rounds really only started 2022. And in the meantime, you for Archax now, you had to go through this regulatory sort of round where you needed to become compliant with certain regulations and then become registered. That's a 4-year journey. To stay hardworking and to stay the course and to stay enthusiastic. I mean, that takes some doing when you think, oh shoot, is this going to work or not? I mean, just go through that emotional journey with us.
Yeah, I mean, it's very interesting. I mean, again, looking back to the early days, 2018, 2019, there are, we were out on the circuit. I mean, London has quite a vibrant fintech circuit, quite a vibrant blockchain community, fintech community, crypto community too. So, we were heavily involved in all of that and met lots of people, some investors, which was good, but also other players in the space, other people setting up companies, building companies and the like too. And, and sadly, many of those companies haven't survived. Many of them have been lost along the way for various reasons. Either, maybe they couldn't raise money, or maybe the market moved away from them, from what they were building, or what they were building wasn't quite right. But there are very few that are still in the game that were around when we began. But thankfully, we're still in the game. We're still here, and we did survive. And that's partly down to fundraising, because all along the journey you need to have money. But you're right. It's that drive and enthusiasm is important, because raising money by sending cold emails into VC firms is a pretty soulless task, and it rarely generates any reply at all, let alone any chance of funding. But you have to try these things, you have to try everything. But we found that if we could get in front of people, then we could, demonstrate our drive and enthusiasm and vision and belief in what we were doing. And so that's always been what we've tried to do. And we've done that by, sort of working relationships and getting introductions to people, so that, a warm introduction is, 1,000,000 times better than a cold email or cold call. So we've really worked our networks to get those. And we've been out a lot. We've been to events, conferences all over the world where we get the chance to get in front of investors and get in front of people and talk to people and get on stage and talk about what we're doing and generate interest. So, over the years, we've built up quite an extensive network now of investors from across the world, from all types, from high net worths and family offices through to VC firms and institutional investors too. But at the start, you don't have any of that. You have to start with nothing and you slowly build it. But I think the key thing is to get in front of people, and the key thing is to be passionate about what you're doing and firmly believe in what you're doing. And then as time goes by, to demonstrate that with achieving milestones, like I said before, technical milestones, product milestones, regulatory milestones in our case, and also investment milestones, because when investors see other people investing, then, that helps them, if someone's invested, and, that adds credibility to the story. And certainly having someone like Aberdeen Asset Management invested in us added a great deal of credibility to our story too.
Yeah, the psychological concept of the queuing. It's like you walk past, let's say, several restaurants, and the one that's the busiest has got the queue outside, and the ones that aren't busy, literally, you can walk in there and get a meal immediately. It's almost that type of thing. You want to get the queuing, so everyone wants to be in on your game as opposed to somebody else's. I think it's quite a challenging thing, and to maintain the energy and to maintain the drive, but also that you get up in the morning and you get going and you get started again, and no matter if you've had absolutely no success, or you potentially even gone backwards a few steps, tomorrow morning you get up again and off you go again, and that there's a lot to be said about that. I want to just touch on, you talk about having skills in sort of financial markets, and just give us a sense of sort of, is this part of the Archax journey that you've had, or did you progressively over your career pick up financial markets experience?
Yeah, it's pretty much, as I say, from, pretty early on in my career, I've been working with firms that are in some way connected with financial markets. So not actual sort of financial market participants themselves, but firms that are involved in providing products or services or data or technology to participants in financial markets. So, you naturally pick that up along the way. Again, I never studied financial markets. I didn't do any take any qualifications in it, but a bit like marketing, over the years, you build up these skills and this knowledge, this experience, and that comes to bear. And, and I think that's really important because it gives you the chance to project an image, well, of yourself and the company that you want. And, coming back a little bit to the fundraising, I think one of the things we've done pretty successfully is punch above our weight. So we've always sort of aimed to project an image, a profile, a brand in the marketplace of where we want to be rather than where we are now. And I think, if you can do that, if you can actually get people to believe that you're somewhere ahead of where you actually are, then, but it's, where you're going to be, then that really helps, and I think it is all about that. It's confidence, as well as skills and everything else. It's that confidence and belief in what you're doing and sort of projecting an image of where you are going to be rather than, I think it's a rather British thing is to be understated, and maybe a more American thing is to over project your image and stuff. But I think it does work, and we've certainly done it like that, and it certainly worked for us.
It's really fascinating because it's the learn by doing concepts. I mean, your continuous professional development, if you like. Just I want to talk around the team. So you said that it was yourself and the CEO that did a lot of the fundraising and that type of activity. But how do you build a team while you are going through this process? Because like you said, there's still the day job to be done. So you got to be out there on flights, maybe traveling, going into different meeting rooms, maybe sitting in the corridor waiting for your turn to pitch or whatever it is that you have to do. How do you make sure that everything else keeps going while maybe you're out on the road for a week or 2 weeks or even away, just sitting and thinking through, okay, what's the next presentation going to look like, and still doing the day job? How do you build a team out, and what does a day look like to you?
Yeah, I mean, I think, I kind of remember the early days of Archax when there was 4 of us sat in a single office, and that's kind of how it all began. The 3 founders, the CEO, one of the founders, the CFO, another founder, and the CTO, the 3rd founder, and then myself as sort of CMO. But that's kind of where it all began. And then somewhere along the line, we grew from 4 people to like 80 people or something that we are now, scattered across the world, most of them here in London. But I'm not quite sure. It's difficult to remember how that actually happened. But I think, at the very start, we had to build a technology platform. So, we started to build a technology team to develop the platform. We had to get regulated. So we started to build a sort of regulatory and compliance team for that. We were going to operate products and services. So we had to build an operations team to operate the products and services that we were going to offer to clients. So it kind of happened naturally in a way. And we kind of grew the areas that we needed at the time.
Finding the right skills, building a culture that has got that sort of startup mentality, because I would say not every potential candidate to come and to get employment from a startup they're a special kind of person as well, to also believe in the company's direction and so on, because they're committing their lives, their career to a company. And for them even to come, for you to make it attractive even to really good talent, if you like, bring them into the company. Explain to me sort of what's the pitch? I mean, again, from a CMO point of view, I'm talking about with your marketing hats on, because you got to think through what do we project? As in, actually, we just a few of us blokes in an office. Like, how do we project we are going to go to 80, 100, 200 people, or whatever it is? I mean, how do you project, like, you're the first employee? And by the way, we're a startup and we're still looking for funding, but we need you because you got tech skills or whatever it is. What does that look like?
Yeah, I mean, it's challenging for sure. I mean, because not only do you want to find people with those right skills, but you also want to find people that fit into a small team, because we kind of knew we were all going to have to work very closely together. So you want people that you're going to get on with, that you like, that you're going to be able to work with. So that kind of narrows it down even more. And then, the brutal reality is we're a startup. We can't afford to pay top dollar prices. So you need to find people who are willing to come and maybe work at under market rates for a period of time anyway, based on promises of in the future, and a share in the business through sort of share options and things like that. So, it is certainly challenging. And it was particularly challenging on the technology side because, there are firms out there, very successful firms out there like Meta and Google and Microsoft who pay people a lot of money. And if you're a technologist, you probably aren't too worried about who you work for. As long as the project's exciting and you get paid a decent amount of money, then so be it. So it was difficult for us to compete with those big tech companies. So we always had to find people who really understood our vision and wanted to be part of this more than just being a pure tech programmer or something. But also we looked abroad. I mean, we ended up setting up an offshore development arm in the Philippines. We've got 30 something people out there. And we did that because, well, the Philippines has a great education system. So it has a lot of skilled people there, people with good technology skills. Second, there's quite a lot of other firms and Western firms with a presence there. So, it was kind of a reasonably well-trodden path. But probably most importantly is that English is almost like a first language in the Philippines. So you don't get any of the complexities of trying to communicate with someone where it's very much a second language that you get in other countries around the world. So it was quite an attractive place to do that. So we built a team out there. But no, you're right. It's certainly a challenge, but thankfully, we've always managed to find people that we need. And I think also this whole crypto, digital asset, blockchain space is quite an interesting space, quite an exciting space to be. And certainly, most of the core team here at Archax now come from financial markets, traditional financial markets. So I think there is, people who can see the potential of blockchain and DLT and tokenization and want to get involved. And if that's the case, then Archax is almost like a perfect fit because, we're very credible. We're institutional grade in nature. We do everything in a regulated way. We're not trying to, win a fast buck and cut corners and do things from some offshore jurisdiction, under the radar of regulators and governments and everything else. We're trying to do everything the right way. It takes a longer time, but we believe ultimately it's the solution that will win the race. So, we're hugely excited about the future. And thankfully, we've always managed to find people who could get excited about the future too and could come and work with us. And we have a great team.
Yeah, if you look more philosophically, you're helping people that may have been in a sort of a dying sector of the financial services space and so on. And you're almost giving them a bit of renewed hope in terms of something new, something special, because blockchain technology has been and is continuing to be a growing sector and is also continuing to be an attractive sector, as well as it seems to be things are moving in that direction. And I mean, you know much more than I do, but it appears to me, and I'm making an assumption that a lot of newer technologies are going to be based on some kind of tokenization, blockchain, that sort of thing, because of its secure elements that nobody's been able to get that kind of level of security with other types of technologies. So it does seem to be a decent progression from if you were in a more traditional type of business to it going into more of a, and I'm not sure about the crypto. I mean, that's a different space, but I mean, specifically blockchain and the tokenization and the security elements underpinning what used to be the traditional way of doing things and moving on. So that's where I see the shift. I mean, would you agree with that?
Yeah, I think that's very, very much the case. And as a bit of an analogy, maybe, I mean, you only have to look at, what's happened in, the retail, the high street. Amazon came along and, completely revolutionized the way we buy things and order things and, everything online. If you look at the sort of taxi world and how Uber came in and sort of completely revolutionized, leveraging technology, sort of revolutionized the way that works, Airbnb and sort of booking accommodation, Netflix and the way we consume films, and then the music industry too. I mean, we used to buy vinyl, then we bought CDs, then we used to have cassette tapes, then we downloaded music, and now we stream it, without even thinking about it. The way we consume and pay for music has completely changed, and technology has facilitated that change. And if you look at kind of the start of streaming music, it kind of began with Napster that did it all illegally. So they were the pioneers in the space. They were the bad actor, if you like, because they were doing it illegally, but it paved the way for Apple Music and Spotify and everything else. And if you then look at financial markets, I think, the front office trading has been very electronic and fast for many, many years, but the post-trade space is hugely inefficient and there's lots of intermediaries, lots of costs, lots of inefficiencies. It takes a lot of time. I think when blockchain technology has the potential to really sweep all that aside and really improve things and make it much more efficient. Maybe sort of Bitcoin, I'm not saying Bitcoin's illegal, but Bitcoin is like the Napster. It's kind of the early use case that demonstrates how blockchain and tokenization can really be harnessed to do things in a different way, and pioneering what's possible. And that has happened. And now we're taking blockchain, the benefits of blockchain that were pioneered by Bitcoin maybe, and using them in a different way to change the way we handle all financial assets and all financial markets, and really improve the way of doing things. So it's not only about improving the way of doing things, it allows people to innovate and do things in different ways. And I think, say countless examples of how technology has transformed markets without us really realizing it. And now it's the turn of financial markets too.
Yeah, because there's definitely, for me, there's always been this massive need, and what I could never quite understand is why the let's call it the more incumbent and the traditional banking institutions, financial institutions took so long to make the shift, and they're still struggling to a large extent because there's a lot of legacy systems, there's a lot of legacy thinking, and even the processes. It seems to be so difficult for them to change that it's almost like the newer businesses, the startups, and have got much more agility, flexibility, and can shift as things become clearer, because it's one of those kind of journeys, isn't it, where it only becomes clear once you've had a few iterations and a few falls and a few bumps and scratches along the way. I mean, that's my sense. And it's more difficult probably for the more entrenched incumbents that have been around for 100 years. It's very difficult for them to make that shift.
Yes, that's very true. And one of the reasons it's so difficult is because financial markets is such a heavily regulated space. The regulations are very strict, and all these big firms are very regulated firms operating in a very regulated space. And for some of the innovation and some of the benefits of blockchain to be realized, regulations have to evolve. And that's part of what we've been doing. As I said, it took us 2 years to get our regulation, and we're constantly talking to the regulators, to MPs, to the civil service, to HM Treasury, to the Bank of England. We're constantly talking to people and helping educate them and trying to push through the changes that we know need to happen for blockchain and tokenization to realize its full potential. And we talk to a lot of the big investment banks and brokers and asset managers around the world. I mentioned, Aberdeen Asset Manager are an investor in us, and we're working with them on tokenization projects. We're working with BlackRock too, which we announced recently. So we're working with a lot of the large investment banks and asset managers. And, kind of looking back to the early days, 2018, 2019, they were pretty scared of this and weren't really publicly commenting on it, but maybe forming teams to look at the space slowly. And then, through to sort of 2020, 2021, some of these firms were doing proof of concepts and actually trying things out. And now where we are today is that, the days of proof of concepts are dying away, and we've got some real world projects happening within these banks and brokers and the like. But it's still relatively small. It's still a very early stage. There's still a long way to go. But I think, people are beginning to understand the space more. They're beginning to realize the potential. Regulations are evolving. They evolve at different paces around the world. Different regulators adopt things more quickly or more slowly than others. But it is evolving. It is improving. It is getting clearer. And so things, really feels like momentum is beginning to build. But, these things move slowly. Big institutions move slowly. Regulators move slowly. We're lucky we can move quickly, but we're trying to help some of these larger players evolve by working with them too.
For the benefit of the audience, and I want to just break this down. I mean, they may or may not be aware of Bitcoin. I want to keep cryptocurrencies and Bitcoin sort of one side if we can, because that again is to do with people's level of knowledge and understanding of those kind of markets in terms of trading, that type of thing. So I want to just leave that one side. But you talk about digital assets, you talk about the ICO and STO and blockchain, etc. Don't you just want to, just for the benefit of the audience, break those up in terms of how does that sort of, what is your value proposition around those things? What are those things? And how are they being used? If we can sort of just break them down. So if we can start with the sort of digital asset space and then go into STOs and ICOs if you can.
Yeah, I mean, I think the digital asset space is kind of, it's all about leveraging technology to do the things that are happening currently in the financial markets world, but do them in a more efficient way. Keeping track of records of ownership on a blockchain is a much more efficient way of doing it than the way things are currently done. The way things operate currently is there's lots of distributed databases. Everyone has their own record of what happened, and quite often they disagree. So there's reconciliations that need to take place. There's a lot of time and effort and money is wasted, a lot of inefficiencies in the financial market space, and blockchain and tokenization have the ability to remove that. And so one aspect of digital assets is just a more efficient technology to run financial markets and handle existing financial instruments. But then there's also the opportunity to innovate and do things differently. And, maybe one example of that is sort of money market funds. Now, money market funds are, they're traditional instruments. They invest in short-term gilt type products. And it means you can put money into a money market fund and earn, currently, a 5+% yield. So, you don't want to be sitting on cash because cash doesn't earn you anything. But you might want to have your money readily available. So you don't want to tie it up in some investment plan. Putting it in a money market fund, is pretty readily available and it earns interest. So that's fine. But so what we've been doing is tokenize money market funds. And you might ask why you do that. Well, when you tokenize a money market fund, you can make it available maybe to a broader cross section of the financial markets community. So people who maybe didn't reach the level that they would need to reach to go and invest in a money market fund with a big asset manager, through a tokenized version through us, they can get access to it at a lower price point, which is very attractive. Kind of an element of democratization, I guess, of financial markets instruments too.
Yeah, well, I was about to say it's democratizing. It's actually making it more achievable and attainable by more people, because the bigger investments and the bigger, they're where the people really make the bigger returns, obviously have higher risks because it's more of an educated investor at that space. But if you can protect people that maybe are not in it every single day, don't understand everything, but at least they understand. I mean, if you think about the post office banking, I mean, it was safe. You could go there, go to the post office, deposit your money. Nothing's going to happen to it. And it's you almost want to get to that same sort of level in the average person that doesn't have a few gazillion in the bank to invest, without the knowledge as well, to go into the tokenized environment. It opens up the space, and then it also increases economic benefits for the wider economy as well, because now you are making money work, because money sitting under your pillow, under your mattress, or in a sort of non-interest bearing account because you're worried, is not making the world a better place. And if you can get money going into deposits and actually working, it's actually better, isn't it? I mean, at the end of the day.
Yeah, it is. And I think, back to the money market fund example, that clearly demonstrates that. I mean, one of the things that you can do, well, in the traditional world, you invest your money in a money market fund, that's great. You get your yield, that's great. But that's kind of the end of the story. When the tokenized version of a money market fund, you put your money into the money market fund, you get your yield, you get your interest. That's fantastic. But you also get this token that on blockchain that represents that owning an element of the money market fund. And once you've got that token, you can use the token as a form of collateral. So, we're working with banks who are looking at using tokenized money market funds as collateral for overnight margin payments for paying their clients. I mean, the whole financial market system works by banks and brokers and financial institutions moving money between themselves. If they can actually move a yield-bearing, regulated, tokenized money market fund between themselves instead of fiat cash, which has to go through banks and takes time and effort, that's very, very attractive. And you look at players in the crypto space. I mean, if you're a hedge fund trading cryptos, trading Bitcoin or something, when you go risk off, you tend to stick your money in a stable coin. It's kind of an instrument, in the digital world that represents, the US dollar, for example. But once it's in a stable coin, it's earning no yield. So it's kind of dead money. It's sitting there, but they don't want to bring it back out into the fiat banking system because that's time and effort. And they want to keep it in the digital world. But if you've got a tokenized money market fund, then you can stick it into that. And so rather than sitting on USD stable coin. You're putting it in a USD money market fund and earning a 5% yield, but you have it instantly available if you need it, if you want to go back into the trading the crypto space. So it's kind of, it's I say a very efficient way of doing things, but it allows people to innovate and do things differently.
So just shifting slightly into a question that I think people are going to have, and it's come up in my mind from time to time, is because things will be tokenized, and it's not as if can't really skim off the top, as in if you deposit money in an account, you just grab a few extra pounds or whatever for yourself as a fee, as a bank fee or transaction fee. And then the rest, give me a sense of, in this blockchain world, tokenization, etc. How does a company like yourself and these traders, how do they make money? Because now they are trading electronic instruments, and it's not really currency, if that makes sense. And I don't know, maybe it's just a not knowing how this thing actually works. How do people make money in this space?
Yeah, but in many respects, it's very similar to existing financial markets. It's just a new technology that they're operating on. For example, in Archax's case, we are a regulated exchange, broker, and custodian for digital assets. So we can handle Bitcoin and other cryptocurrencies, but we can also handle regulated tokenized real world assets too. That could be tokenized equity, tokenized debt, tokenized funds like money market funds, tokenized real estate, tokenized property. So, all these things are available. And the way we make money is, people pay to use our services. So if we're acting as a custodian, we take a fee based on the assets under custody. If through our brokerage, we're helping raise money for a project or bring money into a fund or something, then we make a charge for bringing the money that we bring in on our exchange. If you're trading our exchange, then there are trading fees that get paid for the trading that takes place. So in a way, we're kind of making money in the familiar, sort of similar way to existing financial markets. But obviously, the people speculating and investing in the market, they're hoping to find assets that are going to increase in value, capital, the capital is going to increase in value. So that's kind of what they're looking for. But we're more of a kind of a service provider. So we're providing the tools you need to raise money, to create tokens, to trade them, to hold them, and the like. And that's and we also work on projects. So we work with large institutions who want to explore tokenization, explore blockchain. Then we'll more like sort of consulting fees, if you like, because we're sort of charged that they're paying us for our time and our skills and experience to help them do things. So there's that element too.
That's great. I think that makes it quite clear. So there's a lot of transparency. So it's not too dissimilar to what's always been happening, but it's very much a service fee of some sort, or providing of some kind of intellectual property, and be able to charge some kind of consulting fee. So that's nice and clear. Thank you very much for that. So Simon, I just want to go maybe more, as we come into the end of the podcast, just go into some of the lessons in that, maybe from a personal perspective, just some of the things that you think are takeaways or golden nuggets, or just some ideas that you've learned, sort of call it rules of thumb, or I don't know, whatever you want to call it. But what are the things that you think are some of the core principles that matter these days, and especially in your space?
Yeah, I guess if I kind of look back at the Archax journey, the Archax experience, I think for most of our time, for us, it's all been about raising money, because the only way we could build products and services and deliver what we wanted to offer was to raise money. And to raise money, you need a few things. One, you need a very clear vision of what it is you're doing and how it's going to benefit and how it's going to make money. And so you kind of need very clear positioning in the marketplace of where you fit. You need to understand your marketplace and where you fit. I think that's very important. And certainly at the start, we spent quite a bit of time sort of finessing that vision and how we fit it in with it. You then need materials that explain that and support that. So, you need an investment deck if you're raising money that explains the marketplace, the opportunity, where you fit, what the competitive landscape is, how you're going to make money, how you're going to evolve the business going forward. So you need that. And not only do you need it, but it needs to be slick and impressive and, succinct. And, I think, putting a lot of time and effort into getting the materials right, not only right in terms of content, but right in terms of their look. And, it needs to be engaging. That you talk to these investment firms, they get hundreds of pitch decks every week, so you need to stand out from the crowd in some way. So I think, that sort of positioning, that brand, that image, positioning yourself right is very important. And we spend a lot of time out on the circuit, talking, networking and talking to people and talking at events. So sort of establishing a presence like that again, that differentiates you from the people that don't do that. So, I think that's very, very important too. So I think those, some of the sort of core things, but, particularly from the fundraising side.
I suppose that's what makes certain companies excel. It could be a great idea, poorly marketed to, especially initially investors, and then poorly marketed to the eventual client. It's going to make or break the business. So, I mean, if we go back in the old VHS Betamax sort of concept from years ago, I think Betamax was a better technology, but VHS won because the marketing was better. So, I mean, from a CMO perspective, I think that's probably hats off to you and obviously the team putting those kind of decks together. That's a battle that has to be won. No matter how good your idea is, you still have to get it out there in the marketplace, and it's quite clear.
Yeah, I think that's very true. I mean, the idea has to be a good idea as well, and it has to have a clear future and a clear positioning in the marketplace. It's not only kind of the marketing, the underlying concept, the underlying idea has to be good too. But another, I think, key thing is, if you talk to a lot of investors, they say they invest in people, they invest in teams. So, not only does it need to be a good idea, not only does it need to be well presented, but you have to have a credible team and you have to have the right people because, investors often invest in people. They kind of, if they like the idea and they kind of get the vision, and then it's all about the team. So I think, the human element is hugely important in all of this as well.
Yeah, because one of the things I did pick up in your profile, we did touch on the creative, imaginative, hardworking, drive and enthusiasm, but that second part, I want to try and just sort of focus on that, where it's the ability to instill this culture in others. And this is the thing that I think that you've managed to do. I mean, growing a team that rapidly in only a few years, again, it's a lot of companies, I think the more traditional sort of older school companies used to grow maybe a few employees a year. Now, tech-based businesses, especially your type of business, I mean, within a few years, you've all of a sudden got a load of people to look after. And then to get that, to instill that culture and also continue the confidence, because investors also have to maintain confidence. It's initially you get the confidence, but they also have to keep confidence in your ability to deliver. So I'm guessing the follow-ups and the feedback and the reports and having regular update meetings, because you probably need to go for another round of funding at some stage as you expand and grow again. So you got to maintain relationships. So it's not just getting the relationship in the first place.
Yes, we put a lot of work into that. I mean, if you kind of look at our investors, for example, I mean, we publish a monthly newsletter. So, every month our investors get a, pretty detailed newsletter that tells them about what we're seeing in the marketplace, what we're doing, what we've achieved, what we're building, where we are on our journey. And certainly, I think if, when we talk to our investors, they've always been impressed by the materials that they get from us and the fact that we keep them in the loop. And thankfully, our investors are pretty low maintenance. They kind of let us get on with it. And I think one of the reasons they let us get on with it is because we have a continual dialogue with them. And I know there are other firms, who take people's money and then they go off and, hide away somewhere and develop something and don't tell anyone what they're doing. And I think that's the kind of thing that worries investors when they can't see what's going on. They fear the worst. By the way, I mean, everyone here hates the fact that they have to put their part of a monthly newsletter together, because it's pretty onerous. And then, the next month comes around, you have to think, oh, what am I going to say this month that's different to last month? So it's not the most popular thing internally, but I think it works really well externally. And it's certainly, kept our investor base very happy and engaged. And that's very important because, with each round, sometimes our existing investors reinvest, they top up, and that's always fantastic. But equally, they're all very well connected in the marketplace. So, through them, we can leverage their network to get to other people who might come and invest. But those people are only going to invest if the current investor base are happy and sort of promote us to them. So it's I think that, like you say, I think those relationships are very important on the investor side. They're very important on the sort of partnership side. They're very important on the client side. And we certainly put a lot of effort into ensuring that we have the best relationships with all those parties that we can.
Yeah, so just for the benefit of the audience, for me, the wearing the CMO hat is not just about generating a few leads and a few new customers. It's not that. I mean, it's a total package. You got to understand the financials, the investment, the pitching, the relationship building, and also the constant communication with partners, as you mentioned. I'm sure you have to engage partners and other suppliers. You probably have to make sure that the customers are also being serviced and they also remain good references and testimonials for further investment. But also the investors have to be good credentials and testimonial for you in terms of a portfolio of investors. When I looked at the website for Archax, I saw, one of the things you're very proud of is your investor base. And you should be, because it's taken a lot of hard work to get there. And I'm sure they're proud to know that they have a company like Archax that they can invest in. I want to maybe just sort of finish off by saying, okay, what's next? I mean, what's the journey look like next, either for you or for Archax or for both? What does it look like going into the future? I mean, where do you think this thing is going? I know some of it's early stage still, blockchain and tokens, etc. In the bigger picture of things, it's still a relatively new technology, if you like. And what do you see as you go into the future?
Yeah, I mean, I think you're right. I think, the marketplace itself is at a very early stage. It's, the journey is just beginning for blockchain and tokenization and getting real world assets sort of tokenized and on chain. It is very early days. And for us as a business, I mean, as I mentioned earlier, we only started to go live with products and services in the second half of last year. So the journey so far has really been all about building technology, raising money, getting regulated, communicating our vision to the marketplace. The next chapter, which is sort of beginning now, is all about proving that vision. It's all about evolving the products and services. It's all about building traction in the marketplace. It's all about generating revenue for our shareholders. So, it's a new chapter for Archax, but a hugely exciting one. It's a, different, we're sort of going from talking about what we're going to do to actually delivering what we said we were going to do. So, it's a different set of challenges, but it's hugely exciting. But also for us, it's a global thing. I mean, we're fully regulated here in the UK. We have regulations pending in the Netherlands and Luxembourg, and that will allow us to sort of passport all around the EU again. We've had in conversations with regulators in the US, in Asia, Hong Kong, Singapore, Seoul. So we're looking at other regions. We're setting up in DIFC, the entity in Dubai, with an innovation license there. So we're kind of looking forward to how we expand and offer our products and services around the world, because financial markets are a global phenomenon. There's many sort of global players in the space, and we want to be able to service them globally. So we're kind of looking at how we scale and grow the business, not only the core products and services that we have now, but how we involve those and how we involve our business around the world.
I know your initial 4 or 5, 6 years now have been, it's relatively daunting if you were starting at day one and you're saying, all these hurdles we've got to get through. And now you're going to, let's say, call it phase 2, which is a bit more of a global approach. I mean, you're almost starting at day one there again, but at least you've been through the first iteration, which I think is probably the hardest one. So now you've got a proof of concept, if you like, in a particular country, a well-regulated country, one where a market is quite well established, and it also has quite a lot of credibility in and around sort of the London financial services sector. I think it is relatively well known across the world. So you do have at least that as a starting point, but you are starting across from ground zero. So you're relatively unknown entity. You got to start again, do all those discussions, especially with regulators, etc., because it does change from one territory to the next. So it is a fascinating journey lying ahead. So just maybe as we conclude, any sort of takeaways, golden nuggets, anything that you want to finish off with?
I mean, I think, it's, at the start of any journey or any startup, the one thing that you don't know is you don't know what you don't know. There's lots of unknowns that you're going to find out along the way. So you have to start these journeys with a very open mind and realize you're going to find out a lot of things. You're going to find a lot of challenges along the way that you didn't know existed. I mean, I think if we knew what the journey was going to be like when we started, we might not have bothered starting in the first place, because everything takes longer, everything's more difficult, everything costs more money. But I think that's just the nature of startup life. It's a truism that it's always going to take longer and it's always going to cost more money. But it's all about the journey. I mean, you can't fast forward to the end state. You have to sort of find the route to that end state, and you have to enjoy the journey. And it's certainly been a hugely enjoyable journey for us here at Archax. And we're still in the game, we're still here, we're growing and succeeding. So thankfully, that even though the journey's been exciting, the solution is there, and it looks like the next chapter of the journey is going to be as exciting again. But you're right, I'm sure we'll find challenges along the way that we don't know exist yet.
Yeah, so thank you very much for that, Simon. Maybe just for the audience's sake, if they want to get hold of you, they want to have a conversation with you or Archax in general, what's the route? What's the best route to get to speak to someone in the company?
Yeah. I mean, we have a website, archax.com, which has sort of details of ways of contacting us. My email is simon@archax.com. Very easy to contact me through LinkedIn or however. So any route is fine. But yeah, always happy to talk to people.
Thank you very much. Thanks, Simon. Much appreciated. And thank you very much for your enthusiasm today. I think it does shine through, and you're clearly passionate about what you do.
Thank you. Yeah, thank you very much. Goodbye.
Okay, so thanks, Simon. Thank you for joining us today, and absolutely brilliant. Everyone who joined us and watched the episode, especially to our community at Irreplaceable Choice, I think this is a great example of an individual, but also a company that's at the cutting edge, but maintains the cutting edge and also maintains that enthusiasm for life, for challenge, and also stepping up to the plate. So thank you very much, Simon. Thank you very much to the audience who've joined us today. And please, if you do like what we're doing, please subscribe and like this series that we're putting together, and so that you can get to see and speak to and even get in contact with guys like Simon, for if you ever need to get into that space and you need advice, or you need to contact them for their services. So thank you very much. Thanks for everybody, and we'll see you on the next episode.